And in our top business story, statistics released by the Federal Customs Authority has revealed that for the first half of 2014, total free zone trade amounted to 269.6 billion dirhams, while total direct non-oil trade reached 524.7 billion dirhams. The preliminary data from the FCA showed a 7% increase in the total free zone trade in the UAE in terms of value, in comparison with 250.9 billion dirhams in the first half of 2013. The share of imports of the total free zone trade reached 152 billion dirhams in the first half, compared to 137.6 billion dirhams in the first half of the previous year, while the value of exports amounted to 11.3 billion dirhams. Additionally, the value of re-exports reached 106.3 billion dirhams, an increase of 5% from the same period of the previous year. According to a statement by the FCA, free zone trade in the UAE has witnessed increasing growth during recent years as a result of the flexible trade policy of the country and the various facilities provided by the country to attract major companies in the world to establish factories in the UAE free zones. Looking to the free zone's trading partners, Asia, Australia and the Pacific Islands region maintained first position with 48% of the total free zone trade areas, followed by the MENA region with 24%, the European region with 17%, America and the Caribbean region with 7%, Western and Central Africa with 3%, and finally Eastern and Southern Africa with 2%. In terms of imports at the regional level, the statistical data showed that 63% of the free zone imports during the period came from Asia, Australia and the Pacific region with a value of 94.3 billion dirhams. European countries represent the prime market for free zone non-oil exports, topping the major importers from free zones with 31%, representing a value of 3.4 billion dirhams. The re-export statistics for the period showed that the MENA region came on top of the list of the most important free zone trade partners in terms of re-exports, with 55%, equivalent to 51.3 billion dirhams of the total free zone's re-exports. In the area of free zone trade with the GCC, the FCA noted that the percentage of free zone trade with the GCC countries during the period reached 13% of the total free zone trade with the world, representing a value of 34.8 billion dirhams and an increase of 6% compared to the same period of the previous year. A United Nations report has found that mobile phone services in the GCC are among the most affordable in the world. Qatar and the UAE are the fifth and sixth most affordable, with monthly prepaid mobile phone services costing less than 0.3% of gross national income per capita, with Qatar at 0.26 and the UAE at 0.28 respectively. Of the 166 countries analysed by the International Telecommunication Union, Kuwait was at 0.39%, Oman at 0.43%, Saudi Arabia with 0.65% and Bahrain at 0.73%, putting them amongst the top 26 countries. On a raw cost-per-cost basis, the UAE and Oman were also among the cheapest in the world at $9.06 and $9.11 respectively. Monthly prepaid services in Bahrain averaged $12.04, while in Saudi Arabia it costs $14.13, in Kuwait it was $15.07 and $18.68 in Qatar. The cheapest mobile costs were in Sri Lanka at just 95 cents, while the most affordable according to GNI per capita was in Macau, followed by Hong Kong, Denmark and Singapore, and then Qatar and the UAE. The report found mobile penetration was often high in developing countries, including more than 100% in Bahrain and more than 80% in the UAE, although fixed-line connections were low at just 3% across the region. Only Bahrain at 13% and the UAE at 13% reached double-digit rates. Internet penetration also has soared in Arab countries, with about 137 million people online by the end of 2013. Bahrain has the highest percentage of the population online at 90%, followed by the UAE at 88% and Qatar 85%. The UAE also has the highest amount of international internet bandwidth per internet user at around 52,000 bytes per user in the region, almost double its internet bandwidth between 2012 and 2013. UAE-based carrier Air Arabia has bought a 49% stake in Jordan's Petra Airlines, which will now be rebranded as Air Arabia Jordan. In a statement to Dubai's bourse, the UAE carrier has also announced on Monday that it will establish a hub at Amman's Queen Alia International Airport. with operations to commence under the new name in the first quarter. Following the acquisition, it is expected Air Arabia Jordan will commence operations in the first quarter of 2015. The newly established carrier, managed by Air Arabia, will follow the carrier's business model, serving as Air Arabia's fifth hub in the Arab world. Air Arabia Jordan will provide direct service to a range of destinations across the Europe, Middle East and North Africa region from Queen Alia International Airport. Two Airbus A320 aircraft will initially be based at Amman Queen Alia International Airport, and the fleet will grow as the business demands, with launch routes to be announced in the coming weeks. Petra Airlines' main shareholder, RUM Group, will maintain a 51% stake in the airline. The Middle East is the 10th largest luxury goods market, with sales exceeding $8 billion. According to Bain & Company's Global Luxury Goods Worldwide study, 9 to 10% of the market has been mainly driven by tourism growth. Dubai alone commands nearly 30% of the Middle East and around 60% of the UAE's luxury market. Among the key drivers identified include local consumption, intra-region tourism and strong historic relevance of luxury in the region. The UAE and the region is witnessing an increasing number of luxury brands either coming into the market or expanding their reach. Among these is international luxury brand Saint Honoré. Its CEO, Olivier Birault, says the UAE, the Middle East, is among their most significant markets, growing at a remarkable pace. Strong continued growth in the UAE, Saudi Arabia, Kuwait, Qatar and Oman is expected. Earlier at the event, the company unveiled a new collection of luxury timepieces in the presence of its brand ambassador, Arabian Screen's glamour queen Sabah Mubarak. Saint Honoré President Thierry Fressard added that Dubai is the right place to start the celebrations, marking the brand's 130 years of celebrating elegant and high-quality products.
In GCC market, this is almost 35% of our market worldwide, and Dubai is the most important country in the GCC. Is number one on the sale, and we want to also even to increase our sale in Dubai. This is one of the countries starting in 1987 to expand our business in this area, and it was opportunity to celebrate in Dubai, but it was very important for us for the starting of this celebration.
As Paris Gallery, in fact, we are always working as a bridge between what we have in the international markets of the luxury brands. We connect and we bring them over here, and we always committed to bring the latest of the luxury to this market. Of course, yes, we carry more than 82 brands when it comes to the watches, and always about luxury, and Saint Honoré is one of the brands that we've carried since like more than 30 years. We're moving with the trend, we're adapting, we're creating a trend as well as Paris Gallery, and we're hoping as well 2015 to move in that direction. Dubai is a focus now, it's a hub for all the luxury brands in the world.